Tired of him. So good morning, y'all. We made it to Friday. We have survived a wild week. It is February the 26th in the year of our Lord 2021. And I am doing a miserable job, as usual, of managing my deltas, which is typical of me. I would have been better off if I had not done anything, right? But occasionally I get in here and I just start plundering around. And I'll start messing with deltas, and it's really a sight to behold. But what we've got now is, our little extension tool that you and I, or retracement tool that you and I mess with, you can actually use this on scalping too, right on your extension. So what you do, let me just show you how to do this. Not that I ever want you guys wandering into this level of doing these things, but so what you do is, let's see, if you were going to scalp to the downside, right? You look for a green candle and you use that little tool to go draw it at the top of the body of the candle. Draw it down to the other end of the body of the candle right there, and click again. And then you move it down to the end of the wick. All right, so if it's a bullish candle, green candle, you move it to the end there. And then you got all these little targets and stuff, right, that need to occur within the next 3 candles. So here's 1, here's 2. And within the next 3rd candle, if the price reaches this little level right here, then we're looking for it to go down to the 100 and maybe even the 200. And look where the 200 is, right on the hourly mid for the day and the VWAP for the day. Y'all, if you don't think VWAP is strong, it is a booger, okay? That is value weighted average price, and VWAP is a booger, especially when you see the hourly mid band. So this is where price has been, based on the hourly. It updates every hour, right? So it's kind of the mid of the hour. And you can see price there, and there's VWAP in the little yellow tennis ball looking stuff. And it's just it's amazing to see how price migrates back and forth around VWAP, right? And VWAP you'll often find is a point of support or resistance, oftentimes. So you see, let's see. So we drew that on this candle. This is the 3rd candle. So it doesn't look like it's going to break the end of this candle to go down here. So you're just as well to take it off if it doesn't do it and remove the drawing. So what do you do now? You wait until you see this isn't an adequate candle, doesn't have a big enough body on it. But we wait for, like you could do it on this candle, for example. That's a bullish candle, so you're going to draw it down, start at the top of the body, down to the 2nd part of the body, but then it doesn't have a wick, right? So that one just triggered, right? But there wasn't much of a wick to do it down, so it's already at the 100 and going to the 200. If you ever want to play with it, it's just something that I am horrible at. Horrible. Let's see. Make sure I take out my right one. Remove drawing. There we go. All right, so it's been really just an interesting 2 days. And I apologize, y'all. I've been just pretty much nonstop watching this stuff. I mean, I would wake up every couple hours last night. I mean, this is what we live for. It's just all this increased volatility, market moving 2 ways. I mean, it's really a sight to behold. Let's see what our other little clock here, where we follow the tick and we follow everything. And you see I've drawn some little fans out there that started helping me pretty much, and then I just dropped, right? But isn't it interesting that we look at our big green monster that we drew? Forget the Fibonacci fans, forget all that crap. Isn't it amazing how our little 50% line that we drew at the beginning of the month of February is still such an important level? Look at that. I mean, price just goes up and down and up and down. And then what does price do? Price goes down toward the bottom level of our big green monster. And what does it do? Man, it just pops right back up to the middle, pops back up, and looks like it may come back down and touch it. So kind of cool just to, to watch how that plays out. And I posted a graph of it yesterday. I mean, I was just sitting here amazed, right? How it was just, the whole thing was just, it'd go up to here and come back down to here and here. It's just pretty neat how that plays out so often. I mean, it's almost like we drew it and the market said, hey, man, we can't go below the green line. And if we do, we're going to be oversold. We'll probably need to pop back up into here. So even with erratic behavior, the big green monster gives us a little bit of comfort to go, well, it's not all out of control like we think it is. Now, let me start by saying this. When we first started this year, or at the end of last year, when you and I started together, I said, do not be surprised. You'll recall this. Do not be surprised if you see me down $2,000, $3,000, $4,000 at any point in time. It happens, y'all, and it happens more than you would think, right? So when we're looking at our net lick and we go, oh my gosh, Bobby, are you kidding me? You're down a few thousand. Yeah. No big deal, right? So this thing can swing wildly, but it's amazing over time. The numbers kind of work out. So we're going to go through what we're going to do today because we got a lot of adjustments to do. I mean, we got a lot of stuff to do today. So good to see everybody. Ken is with us. Ken says that was one of his all-time favorite Elton John songs. That is a good one, no doubt about it. And Drew, Semper Fi to you. Rick took us to the edge of the cliff and we all jumped off. Rick, I got to pick at you, man. I'm sorry. Okay, it is. No problem. Don't pick on Matt today. I'm gonna pick on Rick today. Rick brought us to the Rick trade that we affectionately named after him, and then it just tossed. And Rick, as I told you in chat, we should not have been surprised about that at all, right? Because Rick showed us the wonderful trade, showed us how wonderful it was doing, and then I've done a couple of them this year. They worked out good, but sure enough, after Rick showed us, Bobby jumped in with a 2 contract, and what happened? Boom! The whole thing blew up. So, Rick, I'm just joking on that. It's that trade is absolutely perfectly fine. So, Dimitri, good to see you. James is with us. We missed you, James, last couple of days. Dwayne is with us, and Matt is with us as well, who is the #1 Elton John fan on the planet besides me. So let's see what our netlit is today. And first of all, this is going to be one of those sessions where I'm going to move this over to the side so I can keep an eye on time. So I just make sure that nothing is going to happen. What I actually should do probably, if I'm concerned about it, is totally neutralize my delta. And we'll talk about that in just a second. But let's update everything about our little account here, see how we're doing. We're in a good little upswing right now. So we are at 47,662.55. Oh, come on. My stupid numbers locked. 47,640. That was now 47. Hold on. I'm going to get it in my best shot. 47,690.61. So you and I are, oh my God, it's just going to be good. Let's see. We'll get to play the Jefferson thing. Let's see. We're up $187.41. Where is the mama can go to Applebee's today?
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
All right. So we're up a little bit today from what we were. So let's see what our deltas are doing. And let's see how bad our spreadsheet's going to scream to us. So we go here and we look and we're going to get our little deltas for the day. That's kind of cool. It says we're up $1,400, but not quite from the time that we recorded it yesterday, because normally I don't change that from the time that you and I meet at lunch yesterday. So from lunch yesterday, or from, I guess, the ending of the day yesterday, we're at $1,400. All right, so our deltas, y'all, look at this. We are humongous on our deltas, right? And a lot of that's coming from our SPX trade. It's given 138 of that. So we're 60 something, deltas without that. And when Rick and I were talking about this, you know, he's like, I think we kind of made the decision that you can easily pull out that SPX trade, right? That's going on for 1 or 2 days and just record it without it. But I think I'm going to record it with it, right? Because that's my, you know, I'm right at 195 positive deltas. So let's go and make sure I'm watching my little screen over to the side, not the Jeffersons. All right. Nice little up move in the market right now. So we'll go back to the spreadsheet. And we got 195 positive deltas. What is our sweet, sweet theta, baby? We love the theta. 180.22. It's a lot less than yesterday, isn't it? 180.22. Because it looks like from the time we recorded it yesterday, we received some of that. All right, our evil Vega, negative 271. All right, and here's where I'm in trouble with my spreadsheet. Here's where it's going to yell at me. 3250 on the buying power. 3250 on the buying power. Groovy, groovy, groovy. So it's going to yell at me. My spreadsheet's going to say, you moron. You are the world's worst trader. You don't know jack shot. You are an idiot. Because even though your theta is perfectly in line, you're using too much of your buying power based on what the VIX is, right? What is our friend VIX today? VIX is, let's just go here, type in VIX, see what she's doing today. Oh, by the way, I've been so busy watching the markets, I didn't even get a chance to post our video from yesterday. So my apology, I am way behind. I've just been like glued to the market. This is what we get so excited about. I get so excited about anyway. So the VIX is at 25.85. So we're still in that 35% buying power usage, right? And it says, Bobby, you goober head, you. Look at this. You need short deltas and you need them something fierce, right? I need 267 negative deltas. Wow. Never had it scream at me like that before. So let me look at that, make sure that looks right. Make sure I got everything entered in right. 270, double check my things, because that's almost stunning. It would say I need that much short deltas. But it knows what it's talking about, my little spreadsheet. All right. So we've managed the forest. We realize we're good on a theta basis, but our deltas are a little high. So we do need some negative deltas, right? All right. So we've looked at the forest. The theta forest with nice, juicy, rich premium. Now it's time to look at the trees, right? Now it's time to look at the trees. We know we need to take some of this off if possible. We can keep our theta. We'd love to keep our theta. Vega, you know, it is what it is. So let's just kind of look now at our trees. So we'll go to and start out looking at our equities. See what's screaming to us on the equity space. Look at this. Rick, come back on the mic. Look what you caused me to do. I don't know if mine looks as good as yours, but I kind of did that to where, you know.
Oh, that looks great, Bobby. That looks marvelous.
That look good?
That's good.
And it really pops out. So this is all attributable to Rick. Now, I don't know how to get these going back green. That's my only problem. So I got to work on that. I'd like those to go back to my dark green.
You just have to remove the conditional formatting on those particular cells.
Okay, so just remove the conditional formatting on those.
Yeah, on mine, all I did is I have the text either in green or red, but I don't have the background.
I wonder if I do this.
So it's
Hey, hallelujah, look at that. That's cool. That did it. Hey, Lily, will you cut that down, baby? Daddy's in his class. Thank you, Peacock, or whatever I was going to call it. All right, so that's a good way to do it. So I could actually do, let's see, I could do, hold on a second. That's driving me crazy. Lily, baby, Lily, will you cut that off? Daddy can't hear his class, okay? Thank you, sweetie. All right, turn it down real low. Maybe if I covered this ear up too, but then I hear my booming voice in my own ear, which is weird. So that's a good way to do it. So look, guys, if you wanted to do it quickly after you put that formula in, just grab those cells, click on Format Painter, and then if you'll click right here, it'll just format that down, right? I could have done it that whole way, so I could go, let's see, grab this, grab it down, Format Painter for all those, paint it that way so it does the formatting the same. Yeah, that looks much better. Need to do it there too. Format Painter. But we won't do that today. So we did a lot of different things on the spreadsheet yesterday. Now, if anyone has any questions about how to do this, we can handle that outside of class, right? Or I'll do a specific class on changing that. But I think that's really nice. So it makes the conditional formatting makes that entire cell red, so it really pops. So I can see my losers very, very quickly, right? And I can see my winners as well. So let's just see in the forest what's going on. And I see that UVXY is down 27%, right? So we sold the 9 put. We said that this thing is part of our hedge that we have on, right? And our hedge is not doing too good. It was down worse than this. But let's see, we've only got 21 days remaining in that trade. So let's go look first at UVXY. And as we often do, we manage trades at 21 days. So let's see UVXY. Just want to look at it for a second. UVXY, we are short the put. Now let's look at it in terms of our trade page, because I always like looking at it here. Just helps me to visualize. Yeah, I'll post this on my website, Matt, if you want the whole swing. And I'll just leave all the trades that I've got in there so far. I just won't change it. I can post the one that I've got today, and I'll just post it on the website, sweetbobby.com. All right, so here we are. And we have the, let me change that back to single. So we are at the 9, and this thing's trading about at 9:31. So here we go. We're at 21 days, and we're down a little bit on that. So why don't we right-click it? Let's create a rolling order. And we can roll it out for a week and collect a 27-cent credit, right? I like it. I like it a lot. Now, a lot of times I'll go, well, you know what? I'll make it a little safer. Maybe if we rolled it down to the 8, but you're probably not, or is there an 8.5? Let's see if we still collect the credit. You get, that's a 9-cent debit, right? So we're not going to pay to roll. So we'll just keep that at the 9. Get a little bit of a credit. Let's see if we get filled at 27. No additional buying power. And we bring in more credits. We keep the dream alive for a little longer. And let's get that to fill. Cancel, replace. I've been wanting to do this all day, y'all. I've been so looking forward to being with y'all. I hope y'all been excited too. I really thought we'd go on earlier and maybe try some scalping and stuff, but no, I thought it would be horrible for y'all just to sit and watch me lose money by doing that, scalping. But I do want to show you the power of it, right? Okay, so we filled that at 25 cents. I want to show you the power before we start messing up with our deltas, because the cool thing is right now we are at 180 deltas, right? If I want to neutralize that and basically freeze this profit and loss for the day and say, man, I don't want to take a chance of it going down, then I could sell 3 micro futures. Let's see what that would look like. So you go here, see where the price is. You got your little dome. And I simply go over here and put me an order in to sell, right? And you can move it up and down. And then I would change this to 3. So if I were to sell 3, that instantly gives me negative 150 delta. So if you want to make your whole deltas negative, if you think the market's going to go down, I could sell 4 micros, right? And that would give me negative, 200 deltas and plus 178. So what's that, 22? I'd be negative 22 deltas. And I forget who brought it up. I think it was Dwayne that brought it up in chat, but yeah, these are dynamic, right? And you got to realize what happens to these deltas of your regular option positions when the market goes up. As you can see, my deltas are getting lower and lower and lower. And I can tell without looking to the screen on the side that the market is headed higher because my deltas are going, now it's going, you know, market's heading down just a bit, right? Because it's going up. So you start learning what happens to delta based on the movements of the market, right? And so I can totally neutralize that with the micros. Now, keep in mind, if you had a smaller account before the micros came out, it was difficult to do because you were left with trading the E-mini /ES. And you sell one of those boogers, and that's going to give you negative 500 deltas. Well, that's more than I need, right? I mean, that's really going to extreme. Or if you were to buy an E-mini, then that brings you up by 500. So any questions on that at all? Just want to make sure y'all understand how, if in a pinch, you needed to neutralize your deltas. You want to freeze this amount over here. You want to freeze your P&L, kind of get to delta neutral. Best way to do that is by doing a micro contract. And yes, what if the market, if I sell 4 and the market goes up, I'm going to lose money on those micros, right? And I'm going to lose money on the overall account. Now, what if my deltas right now were 220 and I sold 4 micros? I'd still have 20 positive deltas, right? If the market went up, I would lose on my E-mini micro futures, but I would be gaining a little bit over on the overall account. Okay. Someone unmuted, so there must have been a question. Someone got a question on that at all?
Yeah, I was just going to ask Bobby. So if you sell 3 of the micro minis, I mean, what's the buying power for that?
You know, let's see. What is my overall buying power for the micros here? Negative what, 7,000 or so. And I would imagine if I'm going to get short because I'm positive, it's probably not going to mess with that at all. But let's do this. I've got this thing set to automatically send the order. Let me see if I can change that. Hold on a second. Auto send on off. There we go. Current set second line. So I got to go to the second line to find that. And I do that by hitting that. There we go. Turn off auto send. So let's just look at it, Rick. So now if I've got this to 3, right? And I sell 3. So auto send is off. So this is not going to send the order, but it's going to actually pull it up. You can see it's going to cost me $4.56 to do that. And it has 0 buying power effect. 0 by me selling 3. So that's kind of cool because they know, right, that, hey, you're positive and this is going to neutralize delta. So it's not really going to take away your buying power. Now, conversely, what happens if I were to buy 3, right? So if I buy 3, wait a minute, that's going to get you increasingly positive delta. So we are going to use a certain amount of buying power for you to do that. But that's an excellent question, Rick. Excellent question. And does everybody see why they're charging me buying power to get long? I mean, I'm already long, right? So they're thinking, man, you're taking some risk by doing that. But by neutralizing your delta, you're neutralizing your risk, and we won't charge you any amount of buying power because we're using that against your existing positions. Okay? Excellent, excellent question. All right, the giraffe. I see the giraffe on the screen to the left. Looks like the market's just, you know, going up, taking a little breather. The giraffe is reaching his head down, take a drink. All right, so we rolled our UVXY. So let's see how that looks on the spreadsheet. UVXY. There you are, you little booger you. So we go to orders, that field, and UVXY. Looks like we closed that one for $1.16. Look, it's $1.17 now. How do we do it? So $1.16 is what we closed it for. We do not need the option name anymore. right? So we're going to book a loss on this particular trade of $24.10. That's okay, because we are keeping our little dream alive. So we exited. That's our oldest trade on the books. We took care of it, managed it, rolled her out in time. So down 24.10. So we'll just click other here because I really don't have a way to deal with losers. I'm used to booking winners, right? We don't want to book losers. So we just call that other. We'll make this whole little thing red. Lily, can you turn that down, baby? Thank you, sweetie. All right. So then we open UVXY up again. So we just put her down at the bottom. I like them in caps. UVXY. One contract. And we rolled it to, let's see, the 9. Still the 9. Put. And out to the side, I'll put R roll so I know what I did. Let's go grab our little option name. Here she is. So now we're at 28 days out. There you are, you little booger. Copy. Go back. Control V. That's a short put. And again, this is part of our hedge too, right? Part of our hedge. We got it going on. Actual delta looks like that was a 55 delta. And that's out there at 28 days. Entered it on the 26th. God, I can't believe this month is gone. Where's this month gone? And look at us, y'all. We got $1.41 to roll that thing. Keeping the dream alive. Keeping the dream alive. And we're already down 2%. Oh, man, I love that red. Look, that just pops, right? A little pink and a little green. So I'll share this thing with you so you can see how that's done. I'll share the spreadsheet with you. All right, so UVXY is taken care of. Clover, baby. Whose idea was it to get into Clover? Never traded Clover a day in my life. We're down 39 bucks on that thing. Let's look at it. Clover, Clover, Clover. We're going to roll Clover out. Clover. Let's see how she's looking. I want to put it on the page here. Clover. What did we have here? We have 21 days. Have a short position. Oh, man, we are short the 10, right? And the price is a little less than that. Hold on a minute. Let me look at my Tasty Works where I have my live actual quote. So Clove. Wow, we still got a great IV rank. Clover Health Investments trade. Here we go. Yeah. Oh, it's got earnings or something coming up sometime. What does that say? Earnings are, what's it doing fast? Can anyone tell me when the earnings are on Clover? Why is that not showing? I want to see it there. Why aren't you showing me? Nonetheless, let's look at our Clover trade. Right click. See if we can roll this little puppy out in time. So it looks like we can roll it out a week. Keep the dream alive at a 45-cent credit. Normally, a lot of the time, March 1st. Okay, yep. That's fine. All right, so a lot of times I like to look to see if I can go down and still get a credit out in time. So if we're rolling it from March 19th to April the 16th, could I go to the 7.5? I'm going to say probably not, right? So you're going to have to pay a debit. So we're not paying a debit on this thing. So we'll keep it at the 10. And we'll see if we can get filled at that 45. May not, but let's see. Roll that out in time. Keeping the dream alive. We'll adjust our price a little bit. If y'all weren't here, normally I'd let that work, right? I'll let that work just a little bit. Let's see if we get 40 cents for it. Should. Yep, there we go. At 42 cents. Thank you for price improving me. So we'll go out to our spreadsheet. And look at this. We just managed our second oldest trade. Make sure there's nothing up above it that's still open. Nope. Everything looks good. So we'll take that out. And let's see this particular trade, how terrible we did on it. Our order on this one, we were able to buy that back at $1.39. Uh-oh, $1.39. So down $33 on that one. So let's go fill out the rest of it. We'll go here, and we closed out of it on the 26th, 21. And we'll take our little loss there. Call it other. And life is good. So I'm going to go there. And color red. And we open her back up, put her down at the bottom. We're like a machine, y'all. We just keep on doing this thing. One, we rolled it to the 10 again, out, 10, put the roll. And man, I should have done it while I was there. So let's grab that option. Here we go. Right click, copy. And Control V for vaccination. Beth was watching something on the vaccination earlier today. She said you could, and I'm not Beth. I mean, she says you can go to the CDC website and do a search for zombie apocalypse, and they actually have like a plan on there for a zombie apocalypse. I'm not Beth. What are you watching? What are you doing? All right, what delta was that? 62. It says a 45 delta. I normally go by probability in the money, 62. 62. And that's going to give us 49 days on that trade. Nice, nice, nice. We entered it on the 26th. And look, here's where it gets sweet as we are theta sellers, right? So we close that for $1.39. That's fine because we collected $1.81 on that roll. Cool and groovy. Already down because we always are. All right, so that's got that trade taken out. Clover is taken out. That just drives me nuts. Let me do this real quick, like that being not red. There. All right, so let's see what else we got to manage. Oh my gosh, TLT is at 49 days, right? We've only been in this 8 days. Let's just look at it. It's at the 135 put. That's down $142. But we've got a lot of time left in that trade. So let's just look at it. Lots of stuff going on in the bond market, right? Let's just see what it looks like on our little screen so I can visualize it. I'm a visual learner, y'all. So where are we with TLT? Here we go. Oh, man, are you kidding me? We're fine. Perfectly happy. Perfectly splendid. If you watch that show on, what is it, Netflix? Perfectly splendid. Beth, what was that show on Netflix we watched where that girl says perfectly splendid? Notting Hill. Huh? What's that movie we watched on Netflix, the series that's so good with the little girl? It's perfectly splendid.
Oh, what was that?
What is that stinking show? Does anyone know? Notting Hill or House? The Home. I don't know what it was. Some scary movie or scary series. So that looks perfectly fine. Let's go to the Analyze tab and let's look at TLT, baby. TLT. And if y'all have any questions about adjustments or anything or what I would do, with an adjustment, please let me know. So I'm going to hide simulations, right? So single symbol, make sure it's on that. Let's make sure that we're looking at that. That's right. That's fine. Yep. This is today. This is the 17th. So if we were to expire at this current price, see, we're still between above the break even, right? Here's a break even price. So that trade, even though it's down, it's perfectly safe and looks like it would be up 79 bucks as of expiration. Okay. So just look at your little trees, make sure they're fine. So nothing really to do right now in TLT. Baba, what a stupid trade. What a stupid, stupid trade. I'm down $546 in Baba. Let's look at it. How many days do we got? Well, same as TLT. We got plenty of time in that trade. So let's see, first of all, what delta it's at. So let's look at our BABA. Lots of adjustments today. I hope adjustments don't bore you because it's really one of the most important things that you and I will do as traders is adjust our trade. Oh man, look at us. We're at a 44 percent probability of that being in the money at expiration, which means that as a probability of touch is going to be about double that, right? Probability that it's going to touch 235 is going to be about 88%. Let's see how close we are to that. Probability of touching, we change that there. And indeed, I said 88%. Probability of that touching is going to be 84%. All right, so we'll manage that at some point, but we've got lots of time in the trade, so we don't have to do it today. All right. And what would I do on Baba? Now, I'm thinking that let's first of all look at it on the Analyze tab because we need to analyze our trees. Throw them out on the table, tell them to take their pants down, tell them to cough and bend over and put on the rubber gloves, right? That's what we got to do to our trees and say, how are you feeling, baby? How are you really feeling? Oh my gosh, am I getting a hug from my baby? Give daddy a baby hug. All right. So let's look at, can you turn that down, baby, so it don't get on the microphone so much? So we're looking at Baba, and the price is at 242.01, right? And look at this, y'all. We are going to be up $500 on this trade if we stay where we're at, and we're not even close to the break-even point, right? It's got to get all the way down to 230. It's at, 242 right now, so it could do that. Now, one of the things that I might do on this one is I could sell a call against it, but I've got something bad in my mind that, do you remember I did that on Goldman Sachs, right? Because our put was going against us. And I said, man, the first line of defense, let's sell a call. And I did that. And the call has been a constant source of trouble for me in the Goldman Sachs trade. So, and now I hate calls anyway. So I'm thinking the worst thing that'll happen is I'll roll this out in time. And I don't think I'm going to do a call, especially after I'm, with the GameStop and everything that's happened. I just hate calls. I hate individual stocks to start with, and I actually hate calls. So Baba, we have told Baba to lay on the table and cough and bend over, and Baba is still just fine. So let's go to IWM and see. Wow, look at this, y'all. Our short put is actually on IWM is actually a little bit profitable. Look at that. But it's got 0 days to expiration. So that's fine. So what we want to do, now I could roll it, but I'm one of these. I just kind of like closing first, right? Uh-oh, the giraffe is dipping down again. I'm watching you, giraffe, on the side. Don't you worry. So let's look at IWM. Oh, here we go. We're at 0 days, right? And that thing is profitable a little bit. I said it was. Let's see if it actually is. Looks like it's 222. See what we can close that for. Create closing order at 136 or 132. Make sure my spreadsheet was telling me right before I route an order that I'm not sure that we're going to make a dime on. Let's see. IWM is at 134. Okay. And we sold that for 169. Okay. I'm with you. 134, 169. We'll take a profit on it. God, it keeps going down. That mid price keeps changing. Maybe I need to wait before I close this one. Can we get out of it at 125? Probably not, but I'm going to try. Let's see if we can get out of it for 126. Now it's moved back up. Now it's at 129, moving all over the place. Let's just get out. Let's get out of you, baby. There we are. We're at 128. Out at 128. How does Daddy do it? All right. So finally, looks like we might be taking a winning trade. Instead of that $1.33, we'll take that at $1.28. And that was one I thought we were not going to get to be a profitable trade. So that's kind of cool. So let's take our option name out because we don't need it anymore. And let's book our little 24% profit. Wow, we can even call that a tasty trade optimum close. So we got out of that on the 26th of our Lord, 21. And we made $39, y'all. That would almost buy all 7 of my family a Burger King value meal combo. Maybe. So we'll make this all green. Make it all green. There we go. IWM. Now, remember, on IWM, that was a put, right? And we had sold the 222 put. And remember, you and I have, well, some of us did. I know Smitty did this trade with me. We've got a long put way out in time that we have still 100 something days on. It's way out in time, right? So we bought the 250 put. So we're going to go out and we're going to sell another put in IWM. Just keep on bringing in credit and reducing our basis. So let me go back to equities and see what delta we sold last time. We sold a 30 delta. That's exactly what I would think I'd probably do again. So we did that one in the 4-day expiration. So let's see our next expiration. Let's go out and just do it again, like we keep on doing. And this is the fun part of trading, right? I mean, you just got to keep on keeping on. So here's IWM. We go out to the next expiration, 7 days. And we go to about a 30 put. We'll sell another one. So where is that at? So we made a little profit on that one. So there's the 30 delta, 31.51. You know, how close do you want to get? We could do a 35. It's not really important to me. I just want to reduce the basis. Keep on selling every week. Let's see if we can get 219. Probably not. Let's try 2. Oh man, it's changing on me quickly. Look at these prices, y'all. We won't get filled anything near that, will we? Let's try 215. Let's just get it going. Let's get in. Let's get into our trade. There we go. We're in at 215. So we will copy that. Copy, copy, copy. And now I could have done that as one order, right? A lot of times I just love doing separate orders. It just makes more sense to me. So IWM, how many we sell? 1. And we sold the we sold the 215 put. And I need to put something else out here because I don't want to offend Ken, but poor me, I put CC covered put, but we won't say what PM stands for. All right. So let's paste her in here. Sold a put. That's our gain, right? Lily, can you turn that down a little bit more, baby? 30 delta. How many days to expiration does that one have? It has 7 days. And we entered that on the 26th. So that's a beautiful little trade. Right? And so here we go. Price on that one was, what was that? 215. So we brought in $214 into the fold. We're already down 6% on it. Wouldn't you figure? All right, so that's IWM that we figured out there. We took our profit on that. DraftKings, baby. DraftKings with the earnings and everything. We just stayed right in it. It didn't deter us a bit because we like the stock. We like the stock. And this puppy is at 41%. You know, Tasty Trade Optimum close. It's giving me a nice little profit of $46.90. And we've only been in this trade for 3 days, and you're at 41%. Y'all, book it, Dano, book it. So our wonderful little trade there, let's go book it. And the thing is, the next down day that we have in DraftKings, I mean, what are we going to do? We are going to do it again. We're going to go out there and we are going to get some more of that stuff because I'm getting me 100 shares of DraftKings just from the premium that I sell this year. That's my goal. I want 100 shares by the time you and I finish. So let's close this puppy, take our money and run to the house, y'all. Let's try for 66 because we're greedy son of guns. See if we can get out. Yep, we did. We're out at 66. So let's take that money, take that risk off. So here we go. DraftKings. I feel like I'm talking to y'all like y'all are little babies or something. Here we go, kids. Y'all gotta keep in mind, I got 5 of them at the house, right? I ain't trying to talk to y'all like babies, but I try to talk to my kids like, okay, don't kill the chicken anymore. Okay, Lily? You've killed enough chickens. Let's don't kill another one. All right, let's see. Order field. We got 66 on that. So current price 66. Let's book our profit. 42%. Trade management, baby. Trade management. 226.21. And we'll take her off. Make our $47.90 with a Tasty Trade Optimum close. All righty. Make her green, baby. Make her green. There we go. Green. All right. Boy, this is exhausting. I feel like I need a V8 or something. Of course, I hate tomatoes. Ugh. Y'all, look at this. We are at 97% on Apple, and it expires today. Well, I'll tell you what, Bobby, if I was you, I'd just let that thing expire. Let me tell y'all something, friend. I do not. Read my lips. Read my lips. I do not let short options expire like an apple. All right? I just don't. There's only one short option that I let expire, and that's SPX. I am very comfortable trading SPX, and I'm very comfortable letting it go into the 4 o'clock close every day, right? For some reason, I've got comfort in that. I have zero comfort in all these other ones that will trade after the close and they're not cash settled, right? The ones that are not cash settled, like an Apple, that I could take assignment on or something could go nutty after hours. Oh, hell no. Am I going to keep that open? So we're going to close that puppy. All right. This current price is at 2 cents. Let us take our money and run. Now, again, this is one that I could roll, right? But again, we are not, I don't want to do it in one thing. I like just keeping my orders separate if I can. So we're at 0 days to expiration. Let us take our money and let us go to the piggy bank. So we'll right click, create closing order, buy Apple at 2 cents. And we're going to get filled, right? Boom, baby. We got filled at a penny. Unbelievable. How does daddy do it? All right, so here we go. We got even better fill than that. So we got pretty much 99% of the juice out of that one. So Apple, we sold the 32 Delta, right? So let's take this out. We got out of it for a penny. And listen, if you are comfortable taking options to expiration and you say, Bobby, I'm going to save 55 cents on my commission from closing that down or whatever your commission rate is, friend, that's fine. You do it, but don't be yelling at me when we come, you know, and you get some weird wacky action after the market closes when the twilight zone's happening and say, oh, Yo, I need peace of mind. Look at my hair. Look how gray that crap is. Now, I didn't have a bit of gray hair before I married Beth. And then next year, I look like Steve Martin. All right, so here we go. We got out of that for a penny. Took 98% of our profit. So we close that at 226.21. So let's book our little profits. All we're doing, managing trades today. This is all we're doing. Tasty Trade, Optimum Clays. Oh, well, we call this a 50% profit. And we need another one, right? I mean, we took 98% out of that puppy. So let's go close our little trade, take our little profit, go to Burger King. Oh, tonight's Southern Lady Night. Oh, y'all, if you ever come to Bowden to see me, let's make sure we meet at the Southern Lady and get a hamburger steak with coleslaw, swimming in barbecue sauce. I like coleslaw in the barbecue sauce with French fries. Oh my gosh. And I'm doing nothing but gaining weight since I've been fasting. I am counting every calorie. Only thing I've had today is 120 calorie oat and honey granola bar. Those things are delicious. All right, what was I saying? All right, so we took our profit on Apple, but look, what's up with this Apple trade, y'all? It says PMCC. It's really a diagonal, right? It's one of those things. Ken, I'm going to say what we're not calling it. We're not calling it a poor man's covered call, right? We're not going to call it that. It's a diagonal. So we, in our portfolio, have a long Apple position out about 6 months. Look at this, 206 days out there that we paid $4,000 for. Are you kidding me? We got to pay for that thing. Well, I started paying for it today, right? When we just booked our 98% profit and we took in, what was our profit on Apple? We made a profit of, let me look at it. We made a profit of $93, y'all. And we're going for that 4,000. We're just on a reduced basis each and every day, right? So let's go out and sell us another little Apple. Go ahead and start putting her in there. All right, Ken said, why comfort with SPX? Okay, SPX is cash settled, right? So there's no chance of assignment, right? It stops trading at 4 o'clock. I mean, it's dead on the money, right? I don't even got to worry about it for after hours and anything like that. It's just over. Now, the only one that's different is if it's an SPX that has an AM settlement, right? And I stay away from those, period. I don't trade anything that settles in the AM because what happens is that settlement happens not at 4 o'clock, but it happens that next day. And so weird stuff could happen there. And Ken said he woke up one Saturday morning 13 years ago. See, you remember these things, right? Short 1,000 shares of TLT. Yeah, right? Don't want that to happen. Ken also said Apple is a great candidate for the longer term diagonals. It is, man. It really, really is. And I'm bullish on Apple. Matter of fact, we're about to get my little 10-year-old. He's going to be 11 next week. He's going to get his first little Apple phone. So he don't know about it. And that's what Beth's been on the phone about. And Matt, when you first turned on and you heard me say, Jesus, I didn't mean to take the Lord's name in vain. It was just Beth was telling me how much they want to charge us for a monthly cell phone bill by adding a line. I'm like, you kidding me? So we closed Apple at 0 days. Let's go in, man. We're going to do this every stinking week, y'all. I mean, we're just going to 14, 21, 28, 34, 42, 49. And then there'll be some more that come in here. We're going to do it every stinking week until we get 6 months into the 203. There's my number. That's a sign, y'all. Boy Scout Troop 203, the best dang troop you ever see. Look at that. So we're just going to keep on selling premium, baby. So let's go out. Now, I don't know where you want to sell it. 30-something, 34, 35. I like that 30 right there. Heck, I'm going to go a little closer this time. We took so much profit out of that one. I'm going to sell the, well, I better sell the right thing. I better sell the call, not the put. Yeah, that would be interesting, right? Hold on a minute. Let me make sure I understand what I'm doing. Let me go back. I'm making sure that I'm selling calls, right? Yes, calls. Oh, you know, it's one of them days. I did sell the right thing in IWM, didn't I? Y'all double check me on it. Make sure I sold a put. All right, so I'm gonna go out here. I'm gonna sell a call. I could do here at the 30, but man, am I liking this 35, 33? You dang right I am. I want that extra premium of $1.46. Sweet Bobby's feeling lucky at $1.47. Come on, baby, come on. Feel me. No buying power effect. Look at that. Doesn't cost me a bit of, y'all. It is my day. I knew that 203 when I saw it was like fabulous. So let's copy this. We're just gonna do this every week. We'll roll her again next Friday. All right, so I sold Apple. We just running the cash register here. So we filled Apple at, that was the 126 call. And I'm going to put that PM number. We know what that means. Proud Mary, right? Proud Mary keeps on. CC and Control V for Visine. We sold a call, short call at the, what was it, 35 Delta, I think. And we went out and did that at 7 days on the 26th day of our Lord. And we brought in a credit of $1.47. I love it. And we're already down 1%. Always are. All right. If Bobby puts on a trade, it always starts in the negative, y'all. It always starts in the, let's see what the giraffe is doing. The giraffe is looking fine. All right, y'all. It's taking a longer while today. I understand if you got to go, but I want to adjust the trades, okay? And if you can stay with me, I'd love for you to. I hate taking up your time, but I think it's important that we go through trade management. So we've already rolled our Goldman Sachs trades out to 34. You're staying. Good. All right, Ken. You stay, baby. We'll stay here all day if you want to. I mean, we'll just trade together. That's what we're going to do when we meet in Atlanta. We're just going to sit in the room and we're just going to do this all stinking day. All right. So let's see what we're doing on Goldman Sachs. We rolled it the other day, didn't we? So we're at 34 days left in the trade. So there's no sense of urgency for me. Matt's here too. Good. So we're no sense of urgency for us to close that. So let's go and let's just look and see how this Goldman Sachs evil trade is doing. Hold on, let me take some water. So good. I don't even like water. All right, so Goldman Sachs, baby. We are up $340 today. I am the champion, my friend. But I'm down like $1,300 on the whole trade because of that stupid call. But it's finally coming in today, right? Let's look at her. It's time for Mr. Goldman Sachs to take your butt up onto the little, what do you call, little table here. Bend over, Mr. Goldman Sachs, and let's take a look at your stuff here and see how you're doing. All right, so we get Goldman Sachs in here. And how does he look? Well, he looks pretty doggone good, doesn't he? We're going to be up to, hold on a minute. Let me grab that. Let me grab, you want a circle? We normally do it with let me do a circle. Watch over here. If price were to end right where we're at right now, y'all, we are going to make $1,727 on April the 2nd. Hallelujah. Praise the Lord. Glory to God. All right. So that looks good. Now, a lot price come back on in here, wasn't it? Now, look at that. We're going to make $2,500 if that happens. So really, my little trade's looking pretty good here. Even though for the year, I'm down like, hold on a minute, I can tell easier on my phone. How much am I down on Goldman Sachs for the year? I'm down $1,092. Hey, for me, the worst trader in the world, that ain't nothing. I can lose that in a second. All right, so here we go. So Goldman Sachs, nothing to manage. So let's see what we got. XLE, oh my gosh, that's a roll you boat. Let's put you on the table there. Next patient. Do you have insurance, sir? Oh, you don't? Sorry, we got to kick you to the curb. No, we won't. We'll see XLE. We won't kick him to the curb. XLE, there she is. Boy, ain't she pretty. Huh? Y'all, look at this. We're going to have 400. Let me draw my little circle again so y'all don't get lost. We're going to have, there you go. If we expire right here, on March the 27th, that ain't that far away. We're gonna make $416.40. Are you kidding me? If it expires right here at the apex, we're going to make $460, y'all. And how many days we got left in this trade? Let's see, XLE. Where you at, baby? Where are you at? We got XLE. We got 28 days in that trade. I'll see you next week, Jack. We ain't doing anything with you. All right, so we managed everything. XLE, UVXY, we put on Clover. Don't it feel good to be able to do all your trades in an hour? If you can't do it in an hour, you ought not do it, right? All right, here we go. Because I want y'all to do this while you're sitting out in the Cutlass, on your bathtub, on your bathroom break, at work, smoking a Lucky Strike cigarette, listening to Van Halen on the radio. All right, now what we got? Man, I got to get another gold trade on. My friend he just tell me how much money he's making in gold. He's like, hey, Bobby, I'm doing better than you, man. I got the gold flying. I'm like, yeah. That's where I need to be. I know. Gold's one of my better trades of all time. If I can get some of these stupid stock things off, we'll get in there one day. All right, let's see what's happening on our micros. I've been liking to take one off and to put one on. Oh, man, look at price going back to our middle of our green monster. Oh, it's hurting my P&L for the day. All right, here we go, but I ain't worried about it. All right, so anything we can take off. I have not done my little thing where it lights these up, but I will. Man, ain't a single one of them profitable. Well, we got a call profitable, and we've got a call profitable. But y'all, the problem is, y'all know what the problem is. The problem, ladies and gentlemen, is that we have too many positive deltas. I just do, y'all. I just think and do. But I'm going to sell one today. I'm going to sell something. You best bless God I am, because that's what we do. So I'm going to go out, and what are we going to sell? We're going to sell us a call. I hate saying it. I really do. But let's go out and trade a micro. MES. Micro. Come on, baby. Here we go. So we'll go out to 49 days. And we'll pick us a 15 delta call. Come on. Look at all those. Perfectly safe. Man, you'd be losing tons of money, and you go, our closest one, 22% probability of being in the money. Y'all, we looking good. What you talking about? So let's go find us a 15 delta. Look at these. Even these cool calls. I could close them right now for profit. But I'm going to go in. I'm going to sell me a... I'm going to skip a scribe. I'm going to go 16 delta. Let's sell that puppy. Crash, market, crash. See if we care. Let's try to get 21 out of it. Can I get 21, 25? Going once, going twice. Sold in the lady in the second row. She's an 8, she's a 9, she's a 10. I know she got ruby red lips, blonde hair, blue eyes. I'm about to bid my heart goodbye. Little John Michael Montgomery there. All right, here we go. It ain't working for me. Let's cancel replace. We'll go down to 21. 21. Come on, baby, fill me. Be careful who you tell that to, especially if there's a restraining order against them. Come on, baby, fill me. That would be what Michael Scott would say. That's what she said. Nothing. Not a stinking feel. All right. Let's see how you're going to play, Mr. Micro U. Come here, Mr. Micro. Here we go. Get your tail out of here. Boom. Oh, and don't forget, we've still got the SPX Trade. God, what are we going to do on it, huh? All right, so we go here. What did I sell? So here we go. The micro 40-50 call. Hey, baby. Daddy play with you in a minute, I promise. And let's right click and copy. Copy. Pasty. So the short call, as much as I hate them, I do need some short deltas. Short call, we did the 16 delta, but we'll call it 15. And we did that at 49 days out. February 26th. Oh, y'all. So that means that Sunday it'll be the 28th and Monday it'll be the 1st, right? 26th. Oh, man. My mama, when she died, she was 18 years old. Or no, she was 20. She was 22, 24. because she was born on leap year. How about that? So she only had a birthday every 4 years, and that's what she said. So we got filled at 2075. Brought in a sweet little credit of that. Beautiful, baby. Beautiful. So I'll be thinking about my mama, God rest her soul. She passed away in 1994. I wrote a song about my mama. No, I wrote a poem. And we had to bury her the next day because my mom didn't want to be, she didn't want to be embalmed, right? So my Uncle Wart lived out in Arizona. So, man, he had to get home quick because we was like, huh, you don't want my mom smelling, because she don't want to be embalmed. And I remember I wrote a little poem. It had like 5 or 6 verses on it. But the one that I remember, my mama would always buy us, Lifesavers, the little Lifesavers candies. She would buy us those books at Christmas. You could get a little book at the Walmart, and it would have a book of like 8 or 10 of them, have Santa Claus on the outside. I mean, they were just great. Lifesavers book of candy. And she thought we loved them. All of the grandchildren loved them. Well, we didn't love them per se, but she slipped us a $20 bill in there. Now, friend, we got excited about a $20 bill coming from Mama to all the grandkids. So when she passed away, I never got the Lifesaver books anymore. And I wrote this in the poem. I said, and now Mama's gone, and oh, how she'll miss us. And oh, how I'll miss my Lifesavers at Christmas. I'm doing the Bill Clinton thing where he bites his lip. Gonna make me squall. I love my mama. All right, what was I doing? Anyway, so we've got our macros, I think, all taken care of. Okay, so that just leaves us with one thing, and I forgot, I rolled yesterday, y'all. I rolled yesterday the SPX trade, right? Rick, are you still here? Rick, tell us what you did on your trade yesterday on your SPX.
Yeah, I rolled as well. I was toward the end of the day, and I got a little credit, not a lot, but I got a little credit, and I simply rolled till Monday. I'm not sure if rolling till Monday was the smartest. I don't know if you need to roll out further. I'm not really sure. That's one reason why I wanted to see what you did. But I waited till my probability of expiring was at 40. It was over 40. And again, that's just something that I chose. That may not even be the best trigger point to roll one of these. So anyway, but yeah, I rolled late yesterday afternoon.
And I like it, what you did. And I think I even changed mine to where, if it gets like right now, it's yellow, right? So yeah, I didn't put in my, I did not put in my roll yet. And I need to do that. But check this out, y'all. I did how far away is my strike, like Rick did, probability of it being in the money. You look at it now and you go, oh man, we really shouldn't have rolled. I mean, it's safe now, kind of, sort of. But you never know. And I think, Rick, what we did yesterday by rolling, I think it was a smart decision. I got no problem.
No, yeah, I'm with you. You just didn't know what it was going to do today, and
Yeah,
I
I
would
had no
much
idea.
rather, I'd much rather be. I mean, to roll when it's in the money, you might as well forget any time. Well, I mean, you're going to have to go. You're going to have to go up as far as price is concerned to get a credit, or down. You're going to have to anyway.
And Rick,
So
you probably were like me. I mean, you couldn't roll strikes down. I mean, you had to keep the same strikes, right? You kept the same strikes.
correct. That's
And that's
correct.
exactly what I did. I kept the exact same strikes. And let's see if we can figure out what credit I got for that. So there we are, right? We rolled out to the 3810 to the 3790. And I didn't record the roll, and I need to do that. But let's just look at our SPX trade. How safe are we? SPX. Lay on the table, mister. Time for the your little vaccination there, dude. No, that ain't the SPX. Let's see. Come on. Fix it up. SPX. Single symbol. High simulations. What does not look right? Why does that not look right? Hold on. there's something showing up that shouldn't be showing up. Let's see what we got. We got a long 2. We got a short that. Yeah, maybe it is. But the SPX trade. Why is that looking like an iron condor to me? That's looking like something just didn't seem right about that. Is that what I'm used to seeing? Hold on a minute. I got to slap myself. It's like my mind is just going. Hold on, let me do this. Portfolio beta weighted. Let me go. Make sure it ain't picking up some goofy type little thing here. Expiration. I'll do 2 just to make sure it ain't picking up something else. So that's talking to myself. Y'all just keep each other amused. 2 expirations. Portfolio beta weighted. So let me go back to single symbol. Long 2, short 2. Why is this taking so stinking long? Now I can't trust anything on you stupid Thinkorswim. Ken, I cannot wait till I get my little thing that makes this faster. Hopefully it makes it faster. Unbelievable. Hide simulations. I got SPX in there. I got 2 expirations. PL on my open. Probability in the mode. 3, 2, 1. Does that have? I have no idea what's wrong with this thing. Anyway, here's what I'm saying. Let's go back to the. Well, my Thinkorswim is malfunctioning apparently. See, I mean, it's at a 34 delta right now. There's just nothing to do. And y'all, I don't care how far I got to roll it out, right? If I got to roll this thing out a year, man, I'll roll it. I don't care, man. I feel that the market's going to come back. We got a credit for that. I mean, we're watching today, but I mean, today it's safe. I mean, it expires on Monday. Hopefully it'll be profitable. If not, we're going to roll out in the future. So Rick, I think we're on the same exact page there.
So what would you consider a good trigger to, yeah, we got to roll this thing?
I like your trigger just fine as far as, bring me. Now, I will say, I think I'll let it go. It hit your trigger one time, right? It went down to 25 one time, points away. And I was watching that current probability of expiring in the money, and it was like at 39 or so. So I think I actually rolled it when it might have been like 19 points away, something like that, But, I would even go as far. I know Tammy, y'all know Tammy Chambliss. She, hey, turn it down a little bit, baby, okay? Tammy does the 0 DTE, and she's been experimenting a lot with rolling, and she rolls it when her strike is breached, right? When it hits the strike. So we were a little proactive. I don't think it ever hit our strike yesterday. 20, 10, 15, 5, choose your poison. All we want to do is make sure we roll it for a credit. And 2, another thing that I was doing yesterday, Rick, and why I didn't do it when it immediately went to 25 is I was watching this yesterday, right? And the ES is, it's pretty much in line with what the SPX is doing. And I was watching this, and whatever I had drawn yesterday and whatever I was looking for on ticks, I never got to a point at that first touch that I thought I should roll it. But the second time, I was like, I don't know, man. It looks like it may fall out. And that's when I went ahead and rolled it. So I think what you've come up with is absolutely perfect.
Okay. And you would roll it for simply the next expiration, not like a week out or.
Yeah, no, I don't think there's a
longer
reason. As long as I get a credit. Now, if I could not have rolled for a credit for Monday, I'd have rolled to Wednesday, right? Now, if I couldn't have got a credit then, I'd have rolled, I'd have rolled out even farther. So whatever expiration that I can get a credit in, I just don't want to pay a debit on that thing.
Yeah, that's one of the reasons I like this is because with SPX, I mean, unlike a stock, you're almost guaranteed that SPX is going to increase. Eventually, it will increase. At
some point, right?
A stock can go down to nothing, but eventually, that's why I don't like to have to roll, but I will roll these things because eventually get there.
Yeah, I think you're exactly right. And y'all, if we never get there, then we've got more problems than the market, right? I mean, we're talking about a collapse of an entire economy and culture, in America. And I don't think that's where we're going. So yeah. And hey, I got a long time frame. As long as I keep eating healthy as I've been doing, Y'all, I may not even need Beth to trade this account, right? She better be taking care of herself, huh? Me eating all this healthy stuff. Of course, she's doing it now too. So, but Rick, I'm fine with this. I'm totally fine. And that's the thing, y'all. Here's what I want you to know. If you're kind of looking at Facebook and you're looking at Twitter and you're looking at Reddit, y'all, there are some people puking their guts out. And when they puke their guts out on their positions, they're puking their trades out and they're panicking. And that's what I used to do. And so I hope that even with all this market volatility, you hear the excitement in me. You know, I'm like, man, this is great. We get two-sided action. We're rolling. We're keeping dreams alive. We're, you know, managing positions. Oh, we're down $1,000. Oh, we're down $2,000. Well, that's fine. No big deal, right? We're managing trades. We're managing our risk. We're rinse and repeat. It's, you know, it's kind of a boring thing to do. But here's the thing. You've got to get past that point where you go, I'm puking positions. Oh, I got hurt. Oh, God, you know, and you start panicking. And the first step is, I'll feel better if I just close it all out. Let me just shut it all down, right? And you go into your bunker and you start crying and you watching The Young and the Restless. And, you know, it's like you're eating bonbons all day. So we can't do that. We've got to make sure that we know what we do is very methodical. It's a strategy. We've got hedges, and you see what we've done. It's a beautiful little system we got going on. Now, are we killing it right now? No, we're not killing it, but we're fine. I mean, we're not going to blow out the account. We're doing good. We got a little farm going on, y'all. We're farmers. We're tree farmers, theta tree farmers. And we just put the trees on the table. And sometimes you got to say, man, tree, you're not going to make it tomorrow. So we need to cut you up into logs and sell you for 4x4s at the Home Depot, right? And cut the tree down. But as you saw today, there was no need for me to cut a tree down. We just roll your boat. And so we have done a wonderful job of managing our trades. Now, I'm finished with mine, y'all. I can go, you know, I can go sit down, smoke a Camel, do whatever I want to. Let's see how the market's looking. Oh, yeah. See, we found a little support in here at our 50% line. I got all these fans over here. You don't need a one of them. I'm watching ticks. Ticks are going up, you know, and I just kind of watch it. If I need to go in over the weekend, could I sell a couple of micro futures to bring my deltas down a little bit? Yeah. What are my deltas now? Let's see what we're at. Our delta overall is at 143. It was at 100 and what? 80 something a while ago. So I could actually sell 3 micro futures and go through the weekend and be totally short. Now, if the market rebounds, you know, on Sunday night, I'll miss out on some of that. So you gotta just kind of weigh it. You know, where are you comfortable right now? And right now, I'm fine. You know, I'm fine. All right. Any question at all that you guys have on a position that you have or something that you go, man, I need to roll something or do something that I can, you know, like I say, I'm the worst trader in the world. Oh, there is one more thing I wanted to share with y'all. If you got just a second. Hold on, let me close all this. I don't want to draw on a whiteboard. Well, maybe I could. Let me show y'all something. This is kind of cool. I had this epiphany, I can't pronounce it, last night, and it came to me that of something that I wanted to share with y'all. I'm gonna use a blackboard today. All right, so you should be seeing a black screen. And let me draw something. Let me draw something that looks like this. Let's see. I'll draw this. There we go. And then I'm gonna make a quadrant. Y'all, I am getting fancy. Look at this. I'm gonna draw a quadrant. We'll draw a line here, and we'll draw a line here, because this is really gonna help you. All righty. And let's go and let's put, oh man, I can't believe we're doing this. This is awesome. Let's put us a big, let's say that this is calls. And let's say that we got puts over here. Oh man, what's this? I really get funky on you. I'm gonna make that blue. We'll say calls and puts. All right, let's try to get a little bit of participation in here from you guys. All right, so let's say that the market goes up. Market goes up. There's the market going up. Draw that there. And then let's say that there's scenarios that the market goes down. So let's draw one right here. Dang, y'all, this looks professional. All right, now, y'all play the game with me. Here we go. If the market goes up, should you be selling calls or buying calls?
You should buy.
So if the market goes up, will you buy calls up? Well, I guess let me preface it by saying this though. Let's first of all think when the market goes up, will calls be more expensive or less expensive?
They're going to be more expensive because the price is rising. But given your philosophy of selling premium, you would look to sell a put moreover than a call.
So if the so this is, I got to make sure I think about this too, right? So we want to make sure we get this totally right. Market goes up, calls become more expensive. Well, what does that do for our little puts? They become cheaper.
Oh, I got it wrong. To sell calls, if you're going to fade it, that's what.
Yeah, I got you. So puts become cheaper. So let's look at it down. So if the market falls, calls become cheaper. Huh? And our puts become more expensive. All right. So this will be a good little visual to kind of help us to think, even if you're doing these diagonal spreads, right? The PMCCs and the PM whatever. This is going to help us to remember. So if the market goes up, ideally we should be selling calls, right? So we should be selling calls because they're more expensive. If the market goes up, then that's when you would be buying puts. And if any of you are reading about the black swan hedge, this is exactly what happens when you're putting on the black swan hedge. You sell the puts when the market goes down, right? So you're selling puts as the market goes down, and then you are buying calls if the market goes down, right? Those calls go. So let's say that you're going to do a diagonal. Then this is the stuff that you start looking at, right? You start looking at this little quadrant and you go, okay, let's say the market is up in this particular thing. That means calls are going to be more expensive. So it's probably good if I'm going to sell one of the others to be selling calls. Market goes up. You're looking at the put side, those puts are cheaper. So if you're having a choice between buying or selling, you're more likely to be buying puts. Market goes down, that makes calls cheaper. That's when you buy the calls. So market goes down, your puts become more expensive, you sell the puts, all right? So let's say that you're going to do a diagonal where you're going to buy something way out in the future, 6 months, maybe to a year, 2 years, whatever you're doing. When's the best time if you're doing a call diagonal where you're selling the short one and buying the longer dated one? I want to make sure everybody gets that because this is so important. You're going to spend a lot of money buying that option out in the future, right? Wouldn't it make sense to buy that option when it's cheaper? Well, when do you do that? Well, you do it when the market's down, when that particular asset is down. That's when you can buy that option cheaper. So if you're looking to do a diagonal, you're buying something out in time and you're going to spend a lot of money, wait till a good down day. You can buy that one cheaper. All right, so what if you're doing a diagonal put diagonal, right? Where you're selling the short-term put and you're buying the long-term put. Well, you want that longer dated put that you're going to have to put out several $1,000s to buy to be cheaper. Well, when's the best day to do that? Well, do it when it's in an up situation, right? Because you can actually buy a put cheaper than if the market has gone down, because it makes it more expensive. So y'all, let me just make a copy of this so we can post it in the, oh, not that. What the crap is that? All right, here we go. Hold on. I'll post this in our Discord chat. That's a good little visual for us, just to remember. So if you're doing diagonals or you're doing something of that nature, keep this in mind. Very, very important. You want to get the best bang for your buck. And this is how to do it. Any questions on that at all? Any questions? Ken, you got any questions at all or anything you'd like to add to that?
Well, my initial statements were based on swing trading. You do probabilities, and I am a dyed-in-the-wool swing trader.
Sure.
I would do what you say when I know that the swing is low.
Right.
And then a few days later, when I'm looking, expecting a peak or a short-term peak, then I would, follow the same strategy. But on any given day, which is why I answered it the way I did, on any given day, I have to defer to your method of following the probabilities, because I do not for 1 second believe in random walk on a macro level, but only on a micro level. And so that's just difference in my philosophy. I do have one thing to say, because you on the precious metal clay combination there. So the PMCC.
Yes.
I often take the credit side of this instead of you went the debit side, and so it behaves like a covered call, or the long diagonal. And I started doing this with Apple, because Apple is neutral to bullish for the most part. So what I would do is I would sell the at the money put that's expiring at the end of the week. Okay. And whatever premium I get, and you get some fluffy premium. So maybe it's $2. Okay, so I double the premium to 4, and then I go $4. I take 4 strikes down, $4. Not 4 strikes down, but whatever strike it takes down to get that $4. It might be because you often have $2.50 strike differences. I'll be going to looking, five, maybe $5 down. And the reason for the doubling is if you screw the pooch, you risk one to get one. So that's why the double is there. And then I'll buy a long-term put, out of the money. And then what happens is you're expecting time decay, or you're expecting Apple to go up a little bit, and it expires. And if it's slightly in the money, come Friday you roll, and you keep trying to stay as close at the money or just out of the money, and you're collecting premium. And the only real adjustments you got to do with the long side is if Apple starts to go north, you may have to roll that put higher, because you're going to have to hold, some money in margin, because
Right.
you're doing credit spread. And so
hey, Ken, I want you to do this, because I think what you're saying is very important. And I want to, let me get off of this. Hold on a second. All right, let me delete my little screen. I saved it.
Yeah.
All right, give us an example. Let's go to Apple.
All right, go
okay?
up to Apple. Yeah. Okay.
All right, let's go to Apple, and I think it's better to walk through. So
Yeah.
because I'm really slow.
All right. Well, let's go out to the March 5th, because today's expiration date. It's no
Okay.
sense. It's no sense going. And what we're looking for is right at the money put, or just, well, depending on what it is, just in or just out. Our expectation is neutral to bullish.
Yep.
Okay. So that's important, and you need this. And you don't do this with slouch stocks, and you don't do it ahead of earnings, because you can screw the pooch big time around earnings. But when you're away from earnings, and so where are we at? I don't see. What are we? We're Apple's at $1.23, $1.24. So you're looking there. So that's $1.95. Great. So we're going to sell that one, okay? And then we're going to go. Let's double it to $4, okay? So let's go $4.
So you're doubling the credit, right? So we're
Yeah.
receiving about $2, so you're going to double that to $4.
Yeah. So we're
Okay.
in the strike is 123. So 123 minus 4 is $1.19. Did I get that right? Yeah. So you're going to look to buy $1.19 strike, but you're going to go out, at least 4 months. Probably 6 is better. I like 120 days out to 180 days out. So right now, I think it's March. Yeah, July would work. Okay, now you're going to spend some coin here.
And we're going to buy, we can either buy the 115 or the 120.
Yeah, okay. Well, the 119 that puts us in that risk management. That's why you do the doubling, so you know your risk. Now, if you're willing to accept more risk, then you go a next strike out of the money, which would be the 115. The 120 is a little bit. Let's see, it's a $2 difference. So that's $200 on a one lot.
Mm-hmm.
If this was me, I would do the 115.
Okay.
And
so you'd buy that for $710, and you're selling at the money. So both of them are really at the money, right? Well, this one's out a little bit.
Yeah, that's the reason for the difference is that's your protection.
Mm-hmm.
Okay. The most you're going to lose is 123 minus 115. So that's $800. I mean, that's a lot of risk for this, but you're going to collect some money. All right. Now, at the end of the week, you're going to do one of two things. You're going to roll. You're going to roll that short put out. All right. And here's I have a little trick I use, but we're going to get to that later. The thing is, so what you do is you on Thursday afternoon or Friday, you'll look the roll, and you will adjust if you need to adjust your strike because it's gone a little bit into the money or a little bit out of the money. You want to try to capture as much premium. Now, if we're doing the 2 times difference in the strikes, after the second or third right, you've got the difference between the strikes paid for. So basically, you're in a no-lose situation.
And that's what we're always wanting to do on these diagonals, right? I mean, we're wanting to cover the cost of the debit. We're selling something to cover the cost of something.
Exactly, and that's why the 2x rule is. Now you're looking there saying, well, my goodness, I'm paying a big premium for that long put. But the thing is if you watch it, because you're going to want to roll that regardless after about 60, 90 days. So that's when the theta becomes unreasonable for a long out of the money put. And this is what I do with Apple. I've done it with General Motors, and it's been a money maker for me. And that's for me to manage, okay? And given account size and temperament and all the other stuff we're doing. Now, if it goes into the money, you need to decide how you want to do it, because again, this is a short-term play, so I am going to pay attention to random walk. Okay, so it could. But you want to try. Do I want to stay slightly in the money because there's more premium, expecting it to go up? It just depends on when it happens, and so that's how I do that, and that's the reason for the twice the premium received. That's how I decide what the protection, the long put, what strike I get that at, and that's and so you adjust as necessary, and it'll do all right. Now here's a trick I do, and I do this with everything. If I'm rolling like a covered call or any kind of thing, is okay. If you study volatility crushes and theta decay at the near the expiration, you'll find an interesting phenomenon. On Thursday, about 2:30 to 3:30, is they really crush the vol. Okay, you'll see
On
if you
at the money options.
yeah, at the money option, they're going, they decay so fast, and then they close for Thursday. Friday, they got their morning volatility goes up and down, but from about 10:30 to 11:30, 12 o'clock, there's another volatility crush. This is why that zero DDE works. Is that if you get it in the morning by 12 noon, you're going to, what you're doing is they're profiting on this crush. And then there's another crush from about 2:30 to 4 o'clock. Okay. Some things will hold their value all throughout Friday, until the very end, and then it falls to zero really fast. So my little trick is knowing this behavior. I got 3 periods of volatility crush. If I got something, let's say my short Apple put there is lingering around 60 cents on Thursday afternoon. And it's out of the money, and I know it's probably going to get out of the money and expire worthless. I don't want to roll and pay back 60 cents. I want the 60 cents. So what do? Is I locate next week's short put. Let's say the short put is going for $3 or two. Let's say $2. Okay, so I'm gonna create an order for a spread where I sell that next week's $2 put, and I buy a put this week that's for like 10 cents or less. So what happens is the net effect is I've rolled my short puts out of the week, and I created a spread that will expire on expiration. That 60-cent short that I'm hanging on to that I want to keep. And then I got to say a 10-cent option, long option to cover it. They expire. And both of them are going to expire tomorrow. So I have a 50-cent credit spread going on those puts that's going to expire in 24 hours. And of course, that's going to cost you double the margin, but it's only for 24 hours. And then, that way it's like, I'm like I'm like capturing, I'm squeezing the last juice out of.
And so you're kind of creating a little bit of, I mean, you're kind of making it where you're in effect kind of putting in some kind of hedge, I guess, on that to make sure that you're able to extract that final bit of juice.
Yeah. Well, I have. Well, if you're doing Apple, I can't afford in my IRA to have a short put in Apple. Okay, so I have to do that. But if I was doing Gap stores, which is one of the other ones I like doing this with, is I can go naked and I don't have to buy that long, 1 day to expiration 10-cent put, to cover the short. And the reason you do it like on Thursday is that's when the volatility crush starts in earnest for the week, And since remember we're dealing with a short put that's close to the money, so it's going to hang on to its value the longest. And so this is my way. And I saw it's like, well, what the hell? I don't want to roll something that I got 30, 40, 50, 60 cents left on it, and that's crazy, and this was my way of doing it. And I only have to hold the double margin, the difference between the strikes for 1 day, and of course you have, in this case, like you said, you never leave a short put or you never leave a short option to expiration because you don't know what can happen after 4 o'clock.
Yeah, and like you being, assigned short 1,000 TLT shares, right?
Yeah, I had an out of the money credits put spread, and it was going to expire worthless. And I go, man, this is cool. And I was going to collect a wad of money. Well, it turns out it was close enough to somebody wanted it. Somebody wanted that stuff really bad, because it was out of the money. And that's something you can't count for, because some people, they're market manipulators, so they know something you don't, inside information. So they went and exercised when it was out of the money. And or maybe the aftermarket took it to the money for whatever reason. So they took it. So I woke up and I was short 1,000 shares and a $10,000 account. This was over at Options Express before Charles Schwab bought it, and the and so and it turns out that I couldn't do anything until Monday, but it turns out on the open on Monday, I made $3,000. So I was lucky, but I had a hell of a weekend. I got some white hairs, over the weekend thinking about that.
Yeah, and you hear the horror stories with people holding those options, and that's why I just don't do it. It's
Yep.
just I don't care if it's I don't care if it's 100 points out of the money. I am going to I'm going to close that thing. Well, Ken, thanks for sharing that. What we need to do, if you don't mind, we'll schedule a time with you so you can kind of present your ideas too, like Rick did the other day. I think that'd be great. I think
Well,
everybody really
I'd be
loved that.
happy to do that. Right now, what I was thinking about that, because you'd mentioned that earlier in a private chat or in public, that I have a program called Camtasia where I can record my screen and do a lecture. I was thinking of doing that and having some PowerPoints put up to kind of explain things a little better. And
Yeah.
it's recording me and then upload it to the group and let you peer at it, or because it's really that strategy. I don't think I explained it well. Where when you have a complicated role, you try to keep that old expiring short option on the table as long as you can, because you'll see, especially with something that stocks over $50, they'll have going into Friday morning, they're out of the money and they're still holding 50-cent premium, and that's money. And so even if you got say you got a spread that was 20 cents after commissions, you're still making $15, a lot. So I mean, that helps. And it's not being greedy, it's just being prudent with your money.
Oh, I love squeezing the juice out of anything that we can. I mean, that's what it's all about, right? I mean, it really is.
So yeah, I'll be happy to set something. Right now it's not a good time, but I will be making up something, and I need to have, because I don't like telling you something I ain't going to do or follow
Oh
through.
yeah, I got you.
So I got time management stuff where I can actually come through, and because I don't want to let anybody down, because this is something I routinely do. I'll roll
yeah.
it Thursday to Friday. I do the roll on Thursday, and then, see, you get 8 days. You get 8 days of time decay to play with. So your premium's higher for the following week because it's not 7 days, it's 8.
I like
and,
it.
And you collect the last bit of juice out of that turnip that's about to expire. So you end up making a lot more. And that's something people don't realize is, and when I started observing this, is that the market makers, they take out the time decay for Friday, Saturday, Sunday, and Monday. They take it out. They start taking it out on Thursday, and they finish taking it out on Friday. So on Friday, you're getting 3 days time decay being taken out of a short options, and so out of options in general. And if you're short, that's money in your pocket.
So let me rehash it one more time. So what you're doing is you're selling so you're going to hold your short option through the Friday expiration, but you're going to set up your new one on Thursday.
Yes.
Okay. And so then you're going to buy one to complement your short that's expiring on Friday.
Exactly. And you see, if you got the margin, let's say there's there's 5 strikes difference. Well, that's a $500 margin requirement, but for one day.
For one day.
You go down there, and I look, and I don't get too complicated. As I go down there until I find a 10-cent premium, or less, and they'll be there. Sometimes you'll find one that's 3 or 5 cents and go long. They'll bid 0 by 5 or 0 by 3. Go for it. And hold it, and that way. If in the case like for me, I can't do short puts on Apple in my account, and so I don't want that money tied up anyway, and so that's why I spread it. But again, if I got a lower price stock like Gap Stores, I'll just go naked. I don't even have to buy the long. but that's essentially it. And it's safe. Well, it's as safe as any trade, you know.
Well, let us know, Rick. I mean, Ken, when you're ready to do that, we'll do like we did with Rick, and that'll be exciting. So I think we're all looking forward to that.
Yeah, that well, I will be happy to because it's I got something from what you're doing because right now the thing I don't know shite is I don't know how to do portfolio management.
Yeah,
I can
yeah.
do the trades. I'm comfortable with all the trades you're doing. I don't. That's not why I'm here. I'm here to watch the how to handle a portfolio. And I did learn that big green monster. I like it. Okay, and I like it a lot. And it's um, and so so I have a lot to get. I give you $50 a month, but that don't cover the value I'm getting out of this. So I'd be happy to share what I know.
Well, I appreciate you saying that, Ken. I really do. And you're a great part of our community here. And I really like everybody in our group. And it's just it's just a good group,
Yeah, well, yeah, I agree with you.
Yeah, I don't know why the green monster works, but for some reason it does. It's a strange little deal. And my fans, God forbid, don't look at those. But this thing, I mean, you see price collapsing around this this fair value. You see it over and over again. It's just crazy.
Yep.
All right, everybody.
Yep. All right. Well, take care.
Ken, have a great weekend. Matt, have a great weekend. Everybody have a great weekend. Who else is in here? Drew, you all have a great weekend. We'll see you on Monday.